So there's opportunities, I think, with the skilled trades in franchising, and a lot of them have big potential upsides to them. Even to the unskilled trades or unskilled concepts, lawn maintenance and things of that nature, house painting. Some of those can turn into very substantial businesses and are relatively inexpensive to get into. Some offer semi-passive models, simply meaning they developed a more robust support platform to allow franchisees to spend less time, but they're still going to take more of your time than getting into something that's a brick and mortar retail, manage to manager type model that I described earlier.
So let's talk about it for a second. So you talk about the longevity ones, and I also have a friend, he's like a paving company, bought a franchise for paving, asphalt paving. And so step one, you got 1.1. You're like, yeah, and I love longevity and I got the cash and so when you say semi-passive, I mean, you put the money in and you hire the manager and so you said, I mean, you're obviously an expert in what you do, but you're saying like, a day or an hour a week or something where you're doing that. So what do you mean by that? I mean, yours probably is seems like that's obviously the dream, the semi-passive, 1 hour a week. But obviously there's probably a lot that took you to set that up.
Yeah.
Or these franchise really that turnkey at this point with technology and AI and everything else that if you have the capital to start it and you can hire the person, it's great. Are you saying that it's becoming more passive because of technology?
Yeah.
Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more of all of it away to help MVPs. My name is Brett Swartz. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, wisdom, and insight with us so we can all level up and make a bigger impact. I'm excited about our next guest. He's out of Pennsylvania, and he's a franchise consultant, investor, and entrepreneur who helps corporate leaders and investors build semi-passive wealth through strategic franchise ownership. With experience as a multi-unit owner, franchise CEO, and growth advisor, he has spent decades guiding clients towards scalable, cash-flowing businesses, and now he specializes in simplifying the complex franchise opportunities into clear, data-driven strategies aligned with each client's financial goals, risk tolerance, and desired lifestyle, and so much more. Please welcome to the show with me, Mr. Bob Bernotas. Bob, how are you doing?
Good, Brett. Great to meet you.
Excellent. Yep, and for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. Broke into franchising in December of 1986 when I bought my first West Coast video franchise, if you remember the video industry. And of course, you know where that industry is today. Taught me a very valuable lesson in terms of getting involved in things that are technology based. But I've owned multiple franchise concepts that I've built and sold over the course of my career. I was CEO of a national franchise chain for a bit. I've been consulting for a couple of decades now. I'm still a franchise investor. The most recent concept that I bought is called Game Day Men's Health. I bought 6 units of that concept, opened the first one 16 and a half months ago. Second one opened just a little over 6 months ago, both going great. 4 more to go with that concept. I'm a franchise, like I said, I'm a franchise consultant, been working with individuals, franchise investors, groups, helping them find, fund, and acquire the right franchise fit. I tend to have more of a focus on semi-passive franchising, simply because most of my clients are looking for semi-passive opportunities, more of a side income or an off-ramp, eventual off-ramp from corporate America.
Excellent. And that's what we're going to be talking about today, which is basically off-ramping from corporate America to franchise ownership. So, Bob, what is the number one secret to doing just that?
It's really, in my opinion, focusing on things that are, in fact, semi-passive and are very, very scalable. I tend to, when I'm working with a client, there's always a balance between passion, what they want to get into, and then the financial side of it, how successful they're going to be. I always pose the question to all the clients that I work with, where do you fall in the spectrum? Are you someone who is more of an ideologue? You want to be involved in something that is maybe it's a pet related concept because you love your dog, you love animals, you want to be in something pet related. And that's all well and good, but it may not help you achieve your financial goals. So I try to evaluate where you want to be financially, what your long-term strategy is, what your exit strategy is, which I think is absolutely critical to the equation. I tend to work best, I will tell you up front, with people who are more driven by ROI earnings, not necessarily focusing on what the widget is, as long as it's ethical, provides valued service to the community. I feel I have a fiduciary duty to help them succeed financially first. If we can match passion with that, what I've learned over the years is that you can become really passionate about something that you have financial success with. You can also learn to hate something that could be your passion if you fail at it financially.
Excellent. Okay, so the key is getting really clear on not only what you're passionate, but really before that, make sure that it's financially going to be strong, and trying to match that as best you can. In today's environment, what are you seeing the top 5 lowest hanging opportunities in the business world, given the AI is coming, kind of changing the world here?
Yeah, a great question. And like I said at the beginning, I West Coast Video taught me a very valuable lesson about technology. I'll tell you up front, I try to talk candidates that I'm working with out of getting involved in anything that is bleeding edge, cutting edge technology, simply because things are moving too quickly. I always find it somewhat entertaining that a lot of my clients come to me who came from the AI industry, consultants, engineers, whatever it happens to be, and they've gotten laid off because AI replaced their job. And then they come to me and said, "Hey, Bob, can you show me something that is tech driven?" Because that's my background, and I politely try to steer them in a different direction. I think that some of the best opportunities are often concepts that are evergreen. They're not going to go away. They've been here forever. They're probably going to be here forever. Look, there's always a horizon for everything. When I get into something, I'm looking at it as a 3 to 5 year investment. I want to be out of it by 5 years, especially at this point in my life. I'm on the wrong side of 60, don't want to stay in things long term. But generally a 3 to 5 year horizon that I'm looking at. If someone's younger, obviously they want to look at it potentially longer than that, maybe not. But there's so many different things. I love the health and wellness category right now, although some, the right pieces of that, because some parts of it are moving so quickly. Like I'll give you an example. Game Day Men's Health, the one that I invested in, it's purely men. It's a men's concept, does testosterone replacement therapy, ED treatment, weight loss, peptides. So obviously hot category. The first unit that I opened about 16 months ago is tracking over 100K a month at that level. 25, 30K is going to drop to the bottom line. And by the way, I'm only opening that first unit 3 days a week at this point, and have more capacity within 3 days a week. As my membership base continues to grow, and it grows each day, I'll eventually be 4 days a week, 5 days a week. Some of the stores that opened maybe 4, 5, 6 months sooner or earlier than I did, they're already breaking 200K. A month. So big upside to it. I consider that's a unicorn type of investment. There's a reason why I bought it, and I bought 6 of them. I'd love to show everybody that concept, but unfortunately sold out across the US and Canada at this point. But again, that's an example of something I would consider a really strong financial investment. Like if I decided, at 25, 30K a month it's throwing off right now, if I took a snapshot and said it's not going to grow anymore, 25 times 12 months, that's 300K. Multiply easily a 5 multiple of that, maybe a 6, 7 multiple of that. $1.5 to $2 million I could potentially sell that for. My investment was a little more than 350 in that first unit. So again, that's a unicorn. But if somebody says to me, "Bob, show me some of the best financial opportunities in franchising," that's what I'd attempt to do.
Okay, excellent. Yeah, so that makes sense, and thank you for giving that practical breakdown. And yeah, I think that is definitely a popular thing with Men's Health. So take the next step. All right, so you've identified your passion, you've identified a profitable financial one as ideal, right? And then what's the next step to seeing how to basically off ramp from corporate America to the franchise ownership? Are you doing it all at once? Are you doing it slowly? Are you building the team first and the employee? Like, walk us through just like someone finally says, "Okay, I want to go for it, Bob. I'm about to leave my $300,000 corporate position, right? Help me through this."
Yeah, and typically I counsel my candidates that I'm working with, don't walk away from your job. If you have a good paying job, many of my candidates, $250,000 and up in terms of their income, and there's no point in walking away from it if you're going to get into a semi-passive concept. These concepts were really designed to operate on a semi-passive basis. They're managed to manager models. Like for instance, with Game Day Men's Health, I think I mentioned my total involvement is a 1 hour Zoom call per week. Now, granted, I had a very competent manager. And in my case, look, I don't have the bandwidth. I'm not going to jump into a franchise and operate myself or take on that type of responsibility. In this particular case, I was working with a candidate. He was relatively local. I showed him this concept. He absolutely fell in love with it. He just didn't have the capital to execute. So I said, John, would you want to partner? He said, sure. So instead of talking about one, we started talking about three. Then it turned into 6 units that we're going to be developing. But he has the time to put into it. It is a manager model. In this case, he is stepping in to operate as the manager. There's plenty of concepts you can get into now that are really designed to be manager models, and they are reoccurring revenue models. I particularly like those types of models. They tend to sell at a higher multiple. So if someone wants to jump into something full time, they certainly can. If someone wants to jump into it, I would say you're probably going to spend the most amount of time in your first several months getting whatever the business is up and running open. Once it's open with a manager model, you can take a step back and potentially operate like I'm operating, a 1 hour Zoom call per week. Not saying I'm recommending that, but give it a few hours a week, and a lot of models should do really well with that.
Excellent. So let's talk about like jujitsu or martial arts or something that's not, AI is never going to take that over, right? It's such a, it's coaching kids and adults and even like a pickleball, right? Where it's universal. It's going to be older folks, it could be younger folks, everyone in between, and it's fun and it's challenging and it's exercise. And so talk about a little bit of that franchise type of place.
Sure. So with the martial arts, I'm glad you brought that up. I mean, that's a tough category. It's become more and more competitive. I can't say that I'd recommend that category. Maybe 5 years ago, I may have, would have been marginal. Pickleball is a different story. Pickleball is obviously very, very hot. The only problem with pickleball is you better have deep pockets going into that one, because all the concepts out there now are starting out at about 2.5 million and going up from there. I mean, obviously food, beverage involvement and so forth. Now, I know there's some on the horizon that are going to be introduced pretty soon, or they're very young franchise organizations I don't feel comfortable with referring my candidates to, that are less expensive, more kind of self-serve ones. You can check in with credit card and do your thing and then check out, and like one person staffing it. So those types of models I think can make a lot of sense. Are they going to do the volume that the bigger ones will? No, but from an ROI perspective, they may actually be better. But as I mentioned early on, I mean, I like things that are, health and wellness, I think, is a great category. Longevity is a phenomenal category right now. That's flying. There's a brand out there right now that I'm starting to place a lot of my candidates with. A little more expensive. You're probably talking about $750,000 to about 1.1 million in total cost to launch that, but I think it has a huge upside to it.
Excellent.
Yeah, and the other categories, if you want to get into the dirtier categories, so to speak, not pornography, talking about that, but in terms of getting your hands dirty, not necessarily for the owner unless they want to do that, but a lot of the service categories. A lot of roll-ups are going on, let's say, with HVAC companies. So there's opportunities, I think, with the skilled trades in franchising, and a lot of them have big potential upsides to them. Even to the unskilled trades or unskilled concepts, lawn maintenance and things of that nature, house painting. Some of those can turn into very substantial businesses and are relatively inexpensive to get into. Some offer semi-passive models, simply meaning they developed a more robust support platform to allow franchisees to spend less time, but they're still going to take more of your time than getting into something that's a brick and mortar retail, manage the manager type model that I described earlier.
So let's talk about it for a second. So you talk about the longevity ones, and I also have a friend. He's like a paving company, bought a franchise for paving, asphalt paving, and so step one, you got 1.1. You're like, yeah, and I love longevity, and I got the cash, and so when you say semi-passive, I mean you put the money in, and you hire the manager, and so. You said, I mean, you're obviously an expert in what you do, but you're saying like, a day or an hour a week or something where you're doing that. So what do you mean by that? I mean, yours probably is seems like that's obviously the dream, the semi-passive of 1 hour a week, but obviously there's probably a lot that took you to set that up.
Yeah.
Or these franchise really that turnkey at this point with technology and AI and everything else that if you have the capital to start it and you can hire the person, it's great. Are you saying that it's becoming more passive because of technology?
Yeah, I think technology is part of it, the technology stack and platform that these franchise companies are offering. But I look, I don't want to mislead in any way. What I just described in terms of what I'm putting into it, I wouldn't suggest to anybody. Okay, I had a competent manager. I felt comfortable with him. He has skin in the game. That's the only reason why I felt that comfortable to put that much time into it. Otherwise, I probably would. And even when it came to site selection, finding the right location, and it's not brick and mortar retail. That this concept goes into mixed use, professional or medical buildings. So a little easier. Location isn't that important in that case. But I got.
So let me talk about that. I'm a partial owner in a medical building, right? And so we rent out to like people like Kaiser, but it's multi-tenant medical office next to a hospital, right? And so what kind of square footage do you need, and there's certain ones that obviously are more strategic to go in. If you own, SBA financing, right, or you have a chance if you're already a part of owner, you have 51% occupancy or more, but. You mentioned that. Is that what you mean? If you can find if you already have a great location and a great building, is it like, oh, then you have those two things, then wow, then this one would go great.
Yeah, I mean, if it's a real estate investor and they have property, absolutely. But what I'm saying is that it's not, unlike brick and mortar retail where the old adage location applies. It's not as important when you're talking about brick and mortar retail. Non-brick and mortar retail or office space. It's a destination business. Now it's still important to be off a highway and have the other elements around you, but it's not. You don't need that visibility. You don't need the ingress egress has to be ideal and all, and the co-tenants.
Right, I get it. Yeah, they're going there for something that's very particular. It's specialized, right?
Correct.
Yeah. Excellent. Okay, and okay, keep going here. What other ones that are just backing up? Not just opportunities, but more so, what needs to happen for to off ramp, right? And maybe you said like maybe you actually don't off ramp, but let's say someone really does. They say, hey, I actually do, Bob. I actually don't like the corporate gig. They got me in the 300,000, 250 handcuffs. They got all the benefits, but I really want to be out of here in 3 years. Are you saying like a gap analysis? Like, okay, you're making this, and then to get here, you need to get, after tax and different benefits, you need to get here, and let's work our way to that. And is that kind of what you're helping people to strategize through?
That's exactly it. Yeah. And look, some of my candidates that I'm working with don't need to replace their income before they're walking away. They get to half of what their income is, and they just really went out of their job and they're willing to make that move. Others want to completely replace the income and maybe go beyond that. Others want to get into something, start building it, and then start to scale and really significantly exceed their income before they walk away from their W-2. So it really depends upon the candidate I'm working with.
It depends. Let's make it practical. I've heard like, scale through acquisition, right? So our company, Capital Gains Tax Solutions, we focus on building capital gains exit plans for people who are exiting businesses, real estate, Bitcoin, millions of tax. And we like really specialize in a particular part of the tax code. And then we set these things up on a pretty quick basis and are able to execute at a high level. And we've stayed away from like, hey, go buy this company or add this service or add this thing. Like we refer it out, strategic alliance, we refer it out. But how do you know when you're like, okay, yeah, this would be a good franchise for you to get into because it's gonna feed one or the other. In the, let's call it the investment or the real estate or the tax space, you know, does that make sense? Like, is there in that world of wealth, I guess, category for franchises, have you seen where like, oh, okay, yeah, you're not going to dilute what you do. It's really going to enhance it and help you to scale, you know, in a way. Is that making sense?
Yeah, I mean, if someone is such an ilk that they're very wealthy, they don't necessarily need to get into a franchise, but they want to potentially build something, scale it over time into something very significant. I think it makes a lot of sense. Yeah, look, in comparison to real estate, I'm also invested in real estate. I'm involved in several syndications, but things I don't have to put time into. But purely from an investment standpoint, as long as I don't have to put time into franchise, personally, I consider franchising a better investment if you get into the right system. Now, if you get into the wrong one, there's a lot of risk, potentially a lot of risk of franchising. What I counsel all my candidates that I'm working with, look, there's over 4,000 different franchise companies out there. 70 to 75% of them, honestly, I would go nowhere near. I don't think they're worthwhile opportunities. Out of the other 25, 30%, there's some good ones, there's some better ones, there's some exceptional ones out there. If you get into the right concept, and finding the right one can reduce risk dramatically. Certain categories are just going to come with an inherent much lower risk than other categories of franchising. But the potential upside, I don't know of anything that I can get into in real estate, as long as I'm willing to trade a little bit of my time, that can perform like what I bought with Game Day Men's Health. I mean, in a very short period of time, 16 months since I opened that first, 16 and a half months since I opened that first unit, I mean, it is literally worth maybe 5, 6, 7 times what I initially invested in it.
And so let's talk about now the exit piece of it, right? So you probably sold businesses or help others sell businesses, or they help them through the process, but then they go to sell it, right?
Yeah.
Now they're faced with massive capital gains taxes, right? Especially New York, New Jersey, California, Minnesota, these high tax states, Oregon.
Yeah.
So what's been your, 1031 exchange doesn't work for business sales anymore, right? So what's been your biggest frustration when people go to exit? And I'm going to offer you a solution and tell me what you think.
Okay, yeah. You want to tell me first, or you want me to?
No, you tell me what you do, and then I'll share some secrets.
Well, in terms of the tax strategy, honestly, I don't get into that. I refer them. I mean, I have a number of tax attorneys that I can refer to, and accountants I can refer to, but I don't profess to be an expert in that field.
Okay, so let me give you a couple scenarios here, right? So I think the biggest thing that entrepreneurs want, and we had to learn this kind of the hard way after the 2008 crash, Bob, when I was as a Marcus and Millichap helping people buy and sell multifamily properties, and so 1031 was like the only thing we did, right? And unfortunately, it forces you into the same window of time, 45 days, typically, same market, equal or greater value, equal or greater debt, when you end up selling high and buying higher. No, generally speaking, okay? For a lot of deals. For other ones, you maybe find a great deal, but real estate takes about 3 years to transition. But even businesses, they don't even have a 1031 option, right? So we found that you've got to match, kind of like what you said, like the passion with the finance. Like you've got to match the next season of the person's life and the flexibility with the plan and the capital with the tax deferral. In other words, you don't want to go into something that's going to put you in a box that's not allow you to be an entrepreneur, or you don't want to put something that puts you in a box where it's going to force you to be a landlord.
Yeah,
right.
Yep.
It's having the flexibility for the season of life. And so what we found with our strategy, what's so unique about it, is you can do either or both. Okay, and so you can do one or the other. You can be retired or you can be passive. You can be an entrepreneur or inactive, or you can be completely passive. So when you exit, you got to have a plan that gives you both, plus the ability to diversify. And so that's a lot in there, but just to give you an example, we did like a $13 million car wash business real estate exit. And this is a couple of years ago. And they knew the market was hot and high, and they knew interest rates were probably going to go higher. They didn't know they would go so high. But they were smart. They got out of all their debt, they deferred all their tax, and we diversified into multiple investments, hotel businesses, into stock market, into Bitcoin at 40,000 a coin at the time, into real estate debt fund, all tax deferred. And watch this, Bob. They're entrepreneurs, and they're just waiting for the market to make sense to buy again. And so now they can go back, and the trust can partner with them, kind of like a self-directed IRA, and it can buy businesses, buy franchises, buy real estate, all tax deferred, and there's no timing restrictions. And this is the part where a lot of people who listen, they go, wow, where has this been? I'm like, exactly. This is why we started our company, because the old model was you can only sell investment real estate to trade for investment real estate. But I think the tax planning is such a big low-hanging fruit for people because the baby boomers is 124 trillion transferring in the next 5 to 10 years. And this is the largest wealth transfer in the history of the planet. And 50% of all net worth in America is tied to private equity, which is businesses, commercial real estate, and high-end primary homes, all of which are illiquid, not diversified, huge cap gains tax if they don't sell, or if when they do sell, they could hold on to get a stepped up basis is one thing, but most people don't want to die to wait to unlock their capital, right? And so this is what we provide is that service. It's like a seller carryback, Bob. Like you probably know it as a seller carrying paper for the buyer. The difference is we insert a trust in between the buyer and the seller, and we don't have the seller finance the actual buyer. We have the trust the seller finance the trust. So he sells the business for $10 million to the trust sells it $10 million to the buyer. Smoke clears, the trust has no gain because it bought and sold at the same price, and the seller has a promissory note for $10 million and takes it in installments. But the money's sitting like at a Charles Schwab or a Raymond James, and now it can go back into their own deals or just be diversified, and they just pay tax over time. And so we call it the most flexible entrepreneurial business owner exit plan. For people who want to exit. If people want to learn more, go to capitalgainstaxsolutions.com. Bob, when you hear all that, I'm curious, what do you think and what comes to mind?
No, I love what you're saying. In fact, maybe we should talk offline about that later. But yeah, look, when it comes to exit strategy, I apply a simple principle. I want to get my candidates into something that I can reliably predict, or they can reliably predict will predominantly sell out in their market. Absolutely critical, okay, to be able to put you in the best position to potentially sell. The reason being is, if a brand in a particular market is not selling and somebody buys territory in that particular market, well, if somebody else is considering coming into that particular brand, there's plenty of territory to buy. And routinely, you'll see a commonality across franchising, Brett. The first third of franchises consistently do better than the last third of franchises that got into whatever franchise system we're talking about. Very simply because they picked the tier 1 territories. That's what everybody buys first. So first and foremost, I want to get my candidate into a tier 1 territory, but I want to, again, be able to reliably predict. I want a brand that's in the strategies around doing this, but I want to get them into a brand that I know is going to grow pretty rapidly, sell out in their market. So if they decide to sell, they simply go back to the franchise company, let the company know, hey, I'm putting my business up for sale. They'll put them back in inventory, so to speak. And so when they're getting calls from potential franchisees saying, hey, this looks interesting, how do I get one of these? Because a lot more awareness is created with that brand proliferating in that area. Then they're quickly told, sorry, everything's sold out, but we have a resale opportunity. We'll be happy to introduce you to Brett.
Amazing. Thank you. Appreciate that, Bob. And if people want to learn more, go to capitalgainstaxsolutions.com or pick up the book, Building a Capital Gains Tax Exit Plan on Amazon. Bob, we are running out of time. You ready for the lightning round?
Yeah, absolutely. Let's do it.
All right. Knowing what you know now, if you go back to your 20-year-old self, what's the one single piece of wisdom you make sure to tell yourself to do?
Oh, my goodness. That's a great question. Let's see what a great answer would look like. I would tell myself to be patient. I found myself at times wanting to swing for the fences in my 30s and early 40s, and that led to starting over again a couple of times. So patience is probably what I'd talk to my 20-year-old self about.
Excellent. Question number 2, what's the number 1 book you've recommended the most in the past year?
E-Myth. Oldie but goodie. Love the book.
Love it. Question number 3, what are you most curious about right now?
I'm curious about your program, and I want to talk to you about it later.
Besides that, but thank you. What else are you curious about?
I'm curious about where the franchise industry is going. Again, anything that is bleeding edge technology based, I'm trying to stay away from. What's the next thing there? But the franchise industry, I think, has, the way it's growing, the way these brands are becoming more sophisticated, I'm just more and more enamored with what the industry has to offer.
Excellent. Number 1 leadership quote or theme that you strive to live by?
Don't regret things that you can't do a damn thing about once they're done.
Yeah, it's a prayer that I pray almost every day. God, grant me the serenity to accept the things I cannot change.
Behind me.
Change, the courage to change the things I can, and the wisdom to know the difference. Gosh, please write that down, everybody. It's comforted me more than God has comforted me through that prayer more than than I could ever imagine. Next question. Number one way you're using AI, and what tool are you using most?
You're asking the wrong person. My assistant handles all the AI stuff for me, and I have a couple marketing companies that I work with. So in terms of tools, I have no bloody idea. You're talking about like ChatGPT,
It can be cloud or ChatGPT or whatever. Yeah, and it can be your team using it. It's whatever. Yeah.
I don't even know what they're using.
Okay, it's all good. All good.
I pay the experts to do that.
Yeah,
I know my limitations.
Hire the who, don't be the how. Exactly. Next question, last question. We'll wrap it up, Bob. After all the people you've helped to walk away from corporate and or just be more passive and stay in corporate to create more freedom, more impact for their families through additional income and chances to serve the community through their businesses that they're using. How do you best stay centered in your values and stay encouraged to charge for even higher heights?
Be more specific. I'm sorry, I couldn't follow.
So really, I probably should have just shortened it up.
Yeah.
In your life, how are you best staying centered in your core values? Like what's a practice or a habit that you're doing? Okay. And also to stay charged up to reach even, you accomplish all these goals and you stay encouraged to charge for even the next set of goals.
Yeah, I have to always remind myself, it's so important. I have it actually on a piece of paper on my taped to my other screen there, but stay centered on my candidates, the clients that I'm working with. Look out for their best interest. I mean, there's certain things that I like and I would get into, may not be necessarily best for them and their financial situation and everything. And I know there's a lot of people that are in my industry that will chase commission. I leave the commission completely to the side. The way my contract's written with these companies is, I don't care if it's a $2 million concept somebody's getting into or $200,000 concept. The variance might be 10 to 15% in terms of how I'm compensated. So my focus is on the candidates that I work with, what's in their best interest.
Awesome. Hey, Bob, I want to thank you on the show, sharing your wisdom and insight with us. I want to encourage you to keep helping people start businesses. It's going to help to create more wealth, more prosperity here in America and serve more people. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
Sure. You can go to my website, franchisewithbob.com. Pretty simple.
Awesome. Thanks, Bob. And also want to thank all of our listeners and viewers for watching or listening to another episode of the Build His Billions podcast, also streaming on Capital Gains Tax Solutions podcast and YouTube channel. And we're on this journey with you to scale it from millions to billions so we give more all of it away to help MVPs, the most vulnerable people. My name is Brett Swartz. I want to encourage you to take action today. If you're in a corporate job or if you're looking for another opportunity for franchising, reach out to Bob and see how he could help you out. His last name is spelled Bernotas. And also, if you have a large exit coming up, reach out to us. We're happy to help to see if it can be a good fit. Go to capitalgainstaxes.com. Business, real estate, Bitcoin, $1 million plus exits is where we specialize in. Go to capitalgainstaxes.com. Appreciate everyone listening and watching. We'll talk to you soon. Bye now.